The job market just surprised everybody. Private companies added 42,000 jobs in October, snapping that 3-month losing streak. But before everybody gets to celebrating, the details we got today from all of the different news tells a different story. Consumer stress is growing. Washington's record long shutdown just forced the FAA to make some cuts. And hiring's lopsided. So let's start with the star of the show, which was ADP. So ADP's report came in hotter than expected. Economists were expecting to see a number of 37,500 jobs. We actually got 42,000 jobs, but when you zoom in, literally, those jobs came from transportation and healthcare. Leisure and hospitality, which are usually the heartbeat of consumer demand, lost about 6,000 jobs. And when hotels and restaurants stop hiring, that's not just a blip, that's a warning about how confident businesses are in household spending heading into the holidays, which is the busiest time of the year for some of these companies. And once we look in a little deeper, it makes sense once you read it and talk about it, but large companies are who did most of the heavy lifting. Firms with 250 employees or more added 76,000 jobs, while the small and mid-sized businesses shed 35,000. Manufacturing also lost 3,000. So that's the story beneath the headline that everybody's not necessarily talking about. We got the biggest firms are keeping the labor market afloat while the smaller companies are beginning to cut back. Now, once you get back into the report, we see that wages are up. They've held pretty steady, up 4.5% for job stayers and 6.7% for job changers. But that's more so just keeping up with inflation and not so much getting ahead of anything. The labor market's under pressure from these trade wars that's been going on, the immigration squeeze, and companies quietly using AI as a reason to trim headcount. And with the print that we got today, it's not a surprise that the CME Fed Watch tool, which tracks what the market's prediction percentage is for a Fed rate cut, fell from 69% just yesterday to now 61.5%. So the odds of a Fed cut went down based on this strength that we're seeing in the labor market, which when there's strength, there's less need to cut. So no surprise this December 10th odds of a Fed cut went down. And the market's reaction, it was quite positive, even though this really deters what the market overall wants, which would be lower rates for many reasons beyond just companies being more profitable as a buy factor of the Fed cutting rates. So what we've seen overall is tech stocks bounced today. The Nasdaq's up 0.72%. The S&P 500 climbed 0.37%. The Dow up 0.5%. And Bitcoin added 1.9%. So it was a modest recovery after yesterday's sell-off. But like I said, there's mixed emotions with everything going on. And FOMO is still very well alive. Investors Intelligence reports the fewest bears since 2018, with just 13.5% referring themselves at or describing themselves as bearish on this current market. Yet Berkshire Hathaway is quietly sitting on this record $381 billion in cash. So then that leads us to the question, who's smarter in this case? Who's right? Will it be the bulls or the bears in this case? And we were just talking about what the bank CEOs were saying with, I believe it was Goldman CEO David Solomon, expecting to see at some point within the next year a drawdown of 10 to 20%. Morgan Stanley said that kind of pullback would be healthy. And then was it Citi's CEO maybe that said that the market is triumphantly overextended? I don't remember the exact terminology, but just saying. Now, even as these jobs stabilize, consumer stress is beginning to creep in. The New York Fed says, and I believe this was on page 27, let's go there real quick, that delinquency rates are inching up to 4.5%, with the biggest pain hitting the younger Americans. Serious delinquencies, which are 90 days or more late, that number rose to 5.33% in Q3. Now, among 18 to 19-year-olds, 5% of debt went bad last quarter. For 30 to 39 year olds, 3.7%. So those who haven't bought homes and aren't likely to have built up equity or own assets, of course, they're the ones getting squeezed the hardest by inflation, these higher rates, rising living costs, and wages that are just keeping up and not helping you get ahead. On top of this job market where jobs aren't necessarily hiring as much. So it's really tough out there. And once we scroll back up, and we'll start back at the top, because this one was about, total household debt, which climbed to 1% to 18.6 trillion last quarter. Mortgages make up the bulk, being 13.1 trillion, but credit card balances keep climbing too, now being 1.23 trillion. The Fed says delinquencies are stabilizing, but that's cold comfort when balances keep rising and wage growth is flat. So, on another note, we did get a bright spot today on some data, and that's on the ISM's services PMI. So the service sector sped up in October. The ISM index rose to 52.4, which is the fastest pace in 8 months. Orders jumped, but prices paid hit a 3-year high. Inflation's not gone, it's just shifted somewhere else. I think transitory is the word, and we've heard that word before. And even there, the employment component stayed negative for the 5th straight month. Expansion's happening without new hiring. And meanwhile, the government shutdown just hit its 36th day. So we've got another record, and I don't know that this is the record everybody was hoping for, but this 36-day record for the government shutdown, it's showing that there's these cracks happening. And because of that, as a consequence, the FAA just ordered a cut. This isn't a cut of staff, but a cut in air traffic. So the FAA ordered 10% reduction in air traffic at 40 airports starting as early as Friday. Air traffic controllers are working without pay, delays are stacking, and nearly 500 travel companies warned Congress that this week that the holiday season could turn pretty chaotic if the shutdown drags on, and so far there's no end in sight for this government shutdown. So that's where we stand, everybody. Jobs are rebounding, but they're doing so in this uneven manner. Consumers are holding up, but just barely. It just depends on your age at this point. And Wall Street's at a gridlock, and that gridlock is now hitting the runway, literally. So that's what we got, everybody. Hope your day is awesome. Hope you have a good one. I'll be back tomorrow to talk about everything that's going on. I'm sure there won't be a lack of news. See ya.